Okay, so let's have a look at part C for Houghton Ltd 2020 paper question 9. It says prepare a cash budget for Houghton Ltd for 4 months, July to October. So the rest of the information here, part 4, 5, 6, this is where we're going to get our information from. So this first part here, that's looking at our receipts. From adjustment 5 onwards, that's looking at our payments. So our receipts, our sales are in two parts. We've got cash customers, we've got credit customers. So our cash customers are 40% of sales revenue will be for immediate cash, and a discount of 5% will be allowed. And then for our credit customers, 60% of sales revenue will be for credit customers. These debtors will pay their bills in 1 month after sales. So we have a little adjustment to do on this to calculate, number one, what is our sales figure. So you need to calculate what is our sales revenue first of all. Now it tells us up here that the selling price is €5 or €50 per unit sold. Alright, then when we get our sales, we're going to get 40% of that. That's going to be for our cash purchases for this month. We have to calculate 5% discount. That 5% then, that discount will go into our trade and profit and loss account, which is the next part. And then the rest, then your credit sales then will be 60% of the revenue will be for credit customers. So the workings are going to look like this. So we're going to have July. So our sales is going to be 11,400. That's taken straight from the question. So we're going to take each one of these from the question. July 11,400, August 11,600, September 11,800, October 11,900. We're only doing it for 4 months. We're going to stop there. We're going to multiply each one of those units sold by €50, and that's going to give us the total revenue for that month. So we see for July 11,400 multiplied by €50 will give us 570,000. Now of that 570,000, 40% of it is for cash. So that's 228,000. So we're going to take the 57,000 or 570,000, multiply that by 40%. So if I show you my calculator here, it'll be 570,000. Multiply that by 0.4. That's going to tell us cash. So it's 228,000. That's for cash. Now we know of that 228,000, 5% is going to be discounted. So we're giving a discount to our suppliers, to the people who've bought the products from us. So with this 228,000, if we take it from 570,000, we get 342,000. That's the credit sales. And then on this 228,000, there's 5% discount. So we're going to multiply that by 5%. So we need to take off 11,400 to get 216,600. So that 216,600, that's going to go into our July for our cash sales, 216,600. And then your credit sales, which is paid 1 month in advance, that's this 342,000. So if we do it for August, it's going to be 11,600. That's taken from the question. We're going to multiply that by €50. That's going to give us the total amount that we need. So 580,000. Of that 580,000, 40% is for cash. So if you look in the calculator, 580,000, multiply that by 0.4. That's going to give us 232,000. So what's left then, when we take the total amount from the cash amount, is going to give us our credit, 348,000. And then out of this 232,000, we get a 5% discount, or we're given a 5% discount. So that's going to give us 11,600, and that needs to be taken away from the cash amount. So that's going to give us 220,400. So 220,400, and then the credit amount for next month is going to be this 348,000. Okay, so I'm going to show you the calculations for September and October. You can pause the video and help yourself calculate them, and I'm just going to fill them in on the profit and loss account, or in the budget. So our discount, 224,200 for September. And our credit then is going to be 354,000. And for October then we're just going to be calculating our cash. So 226,100. And this credit then, if it came up to do a balance sheet, that'll be your debtors figure. That's the amount of money that's owed to us. So what we do then is we're going to add up what we have in each of our columns for the months. And that's going to be our receipts from our sales. So you're going to have, this question is telling us that it's broken up into two, cash and credit, with a little bit of discount and a calculation of 40% of how much received through cash. The rest 60% received through credit, and we do a working on it. So the next part then is our purchases. So it tells us in our purchases then that 1 month's credit is received from suppliers. So we get 1 month's credit, and we've calculated how much we need to buy, and that's taken from part B. So each one of these items, so July is going to be paid in August. So that's 248, 4,480 is in August. Then our next one then for August then we paid in September, and September then we paid in October. So once again, you can pause the video to find out where those figures are coming from, and then you can just put them in yourselves for your own budget. Now we move down to our expected costs and our capital costs. So it's telling us wages are 20,000 plus 10% of sales revenue for each month payable as incurred. So your next item that you're going to put in is going to be your wages. Now we have to calculate how much our wages are. So it's telling us that our wages are 20,000 plus 10% of sales. Now we would have calculated sales already. So once again, we're going to have an adjustment for this. So I'm going to put the adjustment up here. You can pause it yourselves and see where the figures are coming from. So we know wages are 20,000. They are taken from the question itself. Now it tells in the question that we're going to get commission, or we're going to get an extra amount for 10% of sales that we had for each month. So we would have calculated our sales for each month. We would have calculated them up here as part of our workings up here. So 570, 580, 590, 595. So we're going to get 10% of each one of them. So we just calculate them out to get 10%. 590, 595. So just taking your figures, multiply by 10%, and then we're going to add the two of them together. So you're going to add your wage and your salaries together to get the total amount for July. So 20,000 plus 57,000 for July. August, 20,000 plus 58,000. September, 20,000 plus 59. October, 20,000 plus 59,500. And they're your figures then that go into your budget along here. So these are our figures added in. Remember, there's a working for it. The working is there. Pause it if you need. These figures here are taken from the total sales, which is the units multiplied by the 50 euro. The next part then, as we work down along, variable overheads, 12 euro per unit payable as incurred. So that then is going to be another working. So these units that we need to produce, they're taken from part A. So we know from part A we've workings done of how many units need to produce for each one. Don't take the units that's given in the question, because they're the units that we're not producing for each month. So it's asking us the variable units that we need for each month. So payable as incurred. So it's going to be each one of these figures here, multiply that by 12 euro that's in the question. So 12 euro per unit. So the adjustment or the workings you want to see, we can pause the video again. These are the workings for each one, and then we just put them into our budget just like this. That's your variable overheads done. So the next item we've down along is our fixed overhead, including depreciation. So remember, this is the cash budget, so we need to take depreciation out of this. Depreciation is not cash, so we need to calculate how much is our depreciation, and our depreciation is on our equipment that we purchased. So we purchased equipment on the 1st of July 2020, costing 108,000, which will have a useful life of 5 years. So the adjustment or the workings that you need to have for your fixed costs. So you bought equipment on the 1st of the 7th, 2020, costing 108. And its useful life of 5 years. So the depreciation for the year is 108 divided by 5. That'll give us 21,600 we need to depreciate by each year. We're doing it per month. So that 21,600, we're going to divide that by 12. So it's going to be 1,800. So that 1,800 of the 20,000 is your depreciation. So you need to take that out to give us 18,200. And that's going to be giving you your fixed overheads. So all what we're doing is it's telling us of that 20,000, there's a certain amount of it is for your depreciation. All what we're doing is calculating what the depreciation is per month and taking away. So it's going to be 18,200 for your fixed costs. So the equipment will be purchased on the 1st of July, so costing 108. So in July, we're going to put in 108,000. And then it tells us the repayments on the loan and repayments on interest. So it tells us that the finance to purchase a loan of 96,000 will be secured at 6%. The capital sum is repaid in 48 equal installments. So just that capital is just the principal. So it's going to be 96 divided by 48. That's going to give us 2,000 per month. So each month we're going to pay 2,000 off the principal. So that means that each month your loan is going to reduce. So that 96,000 is going to reduce by 2,000. The interest then, just take that 2,000 out of July because it doesn't start until August. So we look down here, both capital repayments and interest payments commence on the 31st of August. So the interest on each month is to be paid on the last day of the month based on the amount of the loan outstanding at that date. So you need to be careful of this 2,000. So there's an adjustment that we need to do for that. So the loan interest, once again, I'm going to put it up here. You can pause it for yourselves. So for July, it's 96,000 multiplied by 6% gives you 57,600. That's for the year. We're going to divide that by 12. So it's 480 per month. Remember, that doesn't start until August. So we got 480. Next then, so because our principal has gone down, remember we've paid 2,000 already off our principal. So now it's going to be 96,000 minus 2,000 multiplied by 6%. So it's going to be 94,000 multiplied by 6%. 5,640, that's for the year, divided by 12 gives you 470. So 470 then is the next month, and then same again, the next month then is going to be that 94,000 minus 2,000 gives you 5,520, divide that by 12 gives you 460, and then that 460 then goes in here. Just remember, when you're calculating the interest, remember you're going to reduce it by the amount of the principal because it tells in the question that you're paying off 2,000 each month to reduce that principal. The capital sum is repaid in 48 equal monthly installments. So that means that that 2,000 is going to reduce that 96 each month. So the interest is going to get less and less each month. So the next part then, with it then, we've got all our payments put in, so we're going to add up all our payments going across. So whatever's in this column, we're going to add it up. Just done it quickly there if you want to pause the video then to see what the figures are. The net cash then, so your net cash is A, take away B. So we've got our total receipts, which is A. We're going to take away B from them, and that's going to give us what the net cash is at the end of each month. So once again, I've done them up there for you, so you're going to pause the video to see what they are. So we've got negative cash in July. Then it tells in the question that to help us with the purchase of this equipment, we're going to get a loan of 96,000. So 96,000 is going to go into the bank loan. 96,000. What we're going to do is we're going to add them together. Okay, so remember the closing cash for 1 month becomes the opening cash for the next. So once again, I've done them up there for you, so you can just pause the video to see if you're getting the same figures. We got minus for July and August. Now, if you want, you can do the same up for your total. You can tot up all the totals up to help you get this figure here. Kind of with the budget, if these two figures are the same, you know you have it done. So if you have time, tot them up. There are some figures you're going to need for the next to do the profit and loss. Like you're going to need wages, variable overhead, fixed overhead, discount and that. But I'll just do it up and you can pause the video and you can see, check your own figures to see how you're getting on. Okay, so that's the end of the part C done. You can pause the video if you want to help you check your own figures. Any questions, let us know.